Welcome to BizTech's Property Show. Now, this is a show where we look at property markets regionally and globally and give you insights to help you better manage your existing properties, get better returns, and also help you make better decisions about your future purchases. Now, our focus on the show today is the Malaysian property market and what potentially we should be looking out for this year. Now, to help us with that, our guest today is Shylendra. He's the new general manager of iProperty.com in Malaysia. Now, Shylendra, welcome to the show.
Thank you, Brian. Thank you for having me.
Now, Shylendra, how's it been? You've just been on the job for a couple of weeks. How's the transition to the property industry right now?
The property industry is not new to me. I've been part of building marketplaces here, both locally in Malaysia and also in the region, both in a generalist form and also verticals. So it's quite familiar. But I've been away regionally for the last 4 or 5 years. So coming back to Malaysia and working with a homegrown brand is quite an exciting journey and a challenge, and I'm really looking forward to it.
Well, best of luck to you. But let's start with taking a look at the present situation. Could you just give us an overview of the real estate market in Malaysia last year and how commercial and the residential properties performed?
Definitely. So we saw a decline, Brian, in terms of property demand in 2020. And according to our 2020 Portal Demand Analytics or PDA, the sub-sale residential property, the national demand declined about 1.3% year on year.
Okay.
We don't have a lot of information on commercial property, but on residential property, we saw that decline, certainly.
So that's only a 1.3% decline, which doesn't seem like a lot on the sub-sale side. But how about on the new launches and stuff? Was the impact felt there greater?
So according to official data, which was released in Q3 of 2020, the whole overhang situation, especially in residential and service apartments, make up about 84% of total overhang units in Malaysia. So that gives you an indication about the difference between the sub-sale market and the new projects. I think the new projects are making up a bulk of the overhangs, obviously.
And geographically as well, the overhang, if I'm not mistaken, is primarily in Johor, with the the apartments and condominium market. Am I correct? In the Iskandar region.
Yes. So it's about 67% in Johor, and then followed by Kuala Lumpur with 18%. So you're right from that point of view. That region has been developing, as we all know, quite rapidly, and with the current situation, that overhang is reflected in Johor.
So besides the overhead, where are the pockets? So that's obviously a pocket of oversupply and stress, but has that translated into lowered prices?
So that's an interesting point of view. I think what we saw in the first half of 2020, the high-rise properties were lower price, but they also at the same time garnered a higher rental yield compared to the landed properties. So it's interesting that it attracted a lower price, but at the same time, I think more people are beginning to look at rental properties at the same time. Given this current period, not many are willing to commit to a purchase, for example.
Now, is that a function of also a couple of things? One is obviously job insecurity, and second, also the fact that the banks are probably more stringent in lending. Could you share some insights into those sort of two key points?
Sure. So you have made a few points there. I think with the current economic situation and also, as you rightly pointed out, the job insecurity, there may be a situation where buyers may not want to kind of take a risk at this point in terms of committing. But at the same time, the, the banks are also very cautious in terms of approving loans at the same time. So that also bears into the current market situation as well.
Shylendra, one of the things that, and I mentioned this earlier, 1+% decline doesn't seem like a very big decline in a pandemic situation where people lost their jobs. We were actually indoors most of the time. We couldn't, properties couldn't be viewed. Why do you think that the decline was such a small decline? Could you give us some factors in terms of why I would look at it as a very successful year despite all the turmoil that we've undergone?
So, this is our second MCO, if I want to put it that way, or the second lockdown. If you look at the first lockdown and the first MCO in 2020, that was kind of an unprecedented situation. So the market was suddenly, presented with this situation, and of course, the impact was much bigger last year. But over time now, as the saying goes, the new norm has started to kick in, and on top of that, we as a property site have been working with our customers as well in terms of transforming the products to help them during this period. For example,
could you give us an example of transforming your products?
So, for example, we launched, I360, which is basically a virtual view of properties online. So, when a project is launched, a consumer can look at that online without physically visiting a particular property. So then that kind of mitigated the current situation as well. We also started to work with our partners and customers to bring some of the good property deals, which we term as the great property deals, and present it to our consumers as well, especially those deals where there are very interesting incentives, both in terms of first home ownership, in terms of some of the additional incentives that the government has presented in terms of RPGT, for example. So that has now also helped consumers kind of zero in some of these good deals as well. And
could you give us some insights into those good deals? What do you mean by good deals? So, and you can use some of your customer names, for example, who have basically offered these great deals.
So when we say great deals, would be some of our developer partners. They've been traditionally launching new projects, and if you think about the traditional experience, you would need to register and visit the show house, for example.
Yes.
Before you commit, right? That was kind of, and imagine this was not too long ago, but
yes,
COVID has changed this experience totally. And we launched I360 last year. That initially now then allows developers to kind of showcase the property online, and the consumer is able to see a virtual, seeing of the property itself. And at the same time, because of the current overhang situation, developers are also building in incentives to motivate both the first-time buyers, and the government as well as some initiatives put in place, both in terms of first-time buyers and the capital gains tax, and the low OPR as well helps, right? With this situation. So I think it's a combination of all these different points that's kind of driving the new projects.
So, there've been we talked earlier about the potential, the pockets of oversupply in terms of the overhang, particularly in Johor with 60+% overhang, constituting 60% of that. Where were
67%.
the bright spots? Sorry, 67%. So where were the bright spots in the property industry in Malaysia?
I would say, if you think about it, generally speaking, these states, both Johor and Kuala Lumpur, while it's always been traditionally high demand, right? They also kind of received the highest impact as well during this period. So that's kind of a reflection of the situation. But at the same time, while the overhang exists, the rental piece has kind of improved, right? As I mentioned earlier, we saw, the lower priced high-rise properties garner a higher rental yield compared to landed properties. So even in these same areas, even though they have kind of had a big overhang situation, but we did see a switch to rental properties in terms of lower high-rise units in these
So,
locations.
so in other words, there's been a shift where people have perhaps adopted a wait and see and then moved to the safer option of renting. Now, is that also a millennial issue because of affordability?
It's a combination, I would, at least from my opinion, Brian, the data seems to suggest that, yes, during this pandemic, there is an interest in rental. And the combination I mean here is both millennials and also given that the economic situation is such, right?
Yes.
There's a wait and see kind of, thinking right now, and probably the most active are the property investors who are looking for a deal, and they have the cash to kind of go into the market now, and they are probably the active ones. The ones that are looking for their first home or looking to invest their first property may be thinking, okay, let's wait and see how the second half of the year will look like. And that's probably reflected in the fact that rental is beginning to get some interest.
Now, what has been the impact of the loan moratorium? Because there were huge fears that you could have last year particularly, that you would have a collapse in the property market if the loan moratorium did not come in. How has that played out in the market?
I believe the loan moratorium, at least the objective was to cushion the impact of COVID-19, right? That was the thinking, especially for those whose livelihood was affected by the pandemic.
Yes.
That's the kind of driving, and that was the thinking. And then what happened was when the first lockdown was over, we were presented with this second situation now, and there's still a moratorium situation on a more case by case basis. But it is more flexibility that is being presented to them, and I think it has had an impact. But the fact is, Brian, you have to remember the loan moratorium is kind of a deferment of the payment. So
that's exactly it.
While it's I think let's not beat around the bush. It helps those affected for sure, but at the same time, it has a snowball effect. At the end of the line, and the loan cost can be also higher in the longer term.
Yeah, because Shylendra, I think, and you hit the nail on the head. There are a lot of people waiting on the sidelines for essentially a correction to happen, because essentially once all these moratoriums and forbearance periods end, these properties have, because people have, the real stress of the market is people have lost their jobs, People can't service their housing loans. And we've been kicking the can down the road because of the loan moratorium. And there are lots of investors who are waiting in 2021 to get some good deals. The good deals haven't, I think, materialized as quickly as some of the market players I've talked to come about. And they say, oh, because of the postponement of the loan moratorium or pushing it forward and on a selective basis, that's not really happened. Do you see any sort of improvement in this moving forward in 2021?
There are a couple of factors, Brian, right? If you think about where we are now, of course, we are in the middle of the MCO at the moment, but the industry has also kind of gotten used to the new norm. And some of the tools and products that we are helping our customers with is helping them to kind of mitigate this current situation. And at the same time, there is some sort of visibility in terms of the vaccine coming on board as well. Hopefully in the second half of the year, and that could bring up the consumer confidence and subsequently also help drive some of the things that you are talking about, right? So yes, there may be a wait and see situation that I think that is kind of influencing what you're talking about, but it could very quickly, at least in my opinion, could very quickly and rapidly start to shift if the consumer confidence turns around as well. And in the second half, we could potentially see that switch.
And I want to drill down on that a little bit, because if we look at empirical evidence globally, and just let's look at two different markets, Australia and the UK. Despite one is very badly hit by COVID, one is mildly hit by COVID, but both sides of the equation, you see a property boom, especially in Australia. And one of the things is, of course, low interest rates. And that's obviously fueling asset prices as well. Do you see that happening in Malaysia? Because you said, after all, as consumer confidence comes in, they will start to buy. And if we look at empirical evidence globally, that's exactly what Singapore as well, closer to home. Property prices are on their way up.
Sure. So I think the fact that Bank Negara has kept the OPR rates flat, it's kind of a testament that the current situation, but at the same time, the fact that it remains low is also a motivating factor for would-be investors in the near future. And it's a combination that is going to work together, I believe. The consumer confidence, given that some of these pandemic-related changes needs to happen, and I think the government, the Ministry of Health, and so on are working on that. At the same time, you have investors who are on the sidelines, waiting and seeing if that's what is happening in the market. And as both these factors come around, we may see increased interest and ultimately, seeing a conversion in terms of property purchase and property interest in the market, as well as we have seen in some of these other markets where the pandemic has kind of improved considerably. The vaccine is being rolled out, especially in Singapore. They have a plan now to roll this out, in the coming months, and there's a correlation in all these things happening. And I believe it's more of a confidence boost, Brian. When it comes to an investor or a purchaser, investing in a property is a big thing, right? Whether you are a first-time investor or you've been doing this repeatedly, there's a lot of risk and attached, commitment that comes with it, as you know. And you need some favorable market situations to drive you to sign on the dotted line, obviously. And low interest rates, a comfortable economic situation, and at the same time, the fact that the developers are also, and the government is also driving, the overhang situation with some of these property deals will come together if it falls in place. And it won't be perfect, I think, as we go through this journey. But I'm a strong believer. The property industry has gone through many of these kind of cycles. Maybe not seen a pandemic at this scale before, but it's pretty resilient from that perspective.
Shylendra, thank you very much for taking the time to share your views. We've been speaking to Shylendra Nathan, General Manager of iProperty.com Malaysia. I'm Brian Fernandez on BizTech's Property Show. Check out www.biztech.asia for business and technology conversations.